Hello guys, this is Anshuman Rao and welcome back to another new video. So this video is a continuation part of the previous video. If you haven't checked out the previous video, then I will be posting down the links below in the description box. Hope make sure you check it out because we are discussing here the basics of trading. So in this series there will be three total parts in which I will be discussing the main basics of financial markets and trading. So this is the second part, and if you haven't checked out the first part yet, make sure to check it out. I will be posting down the links below in the description box. So let's get a quick recap of what we have discussed in the first part. So in the first part, we discussed about financial derivatives, different types of financial derivatives, and we basically discussed in depth of two financial derivatives which are known to traders, which are the CFDs and the futures, and the third was options. The third was options. So I will be, in this series, the main reason behind, not explaining the options because most of my audiences are, beginner traders. So for a beginner, it's not needed to understand options because it's a very complicated space in trading. So if you are a beginner, I would say you go with the CFDs, and okay, you want more accuracy and a more institutional trading environment, then you go for the futures. So the options is the very complicated part because we have something we called theta decay, we have gamma decay, not gamma decay, but there are theta decays and gamma and stuff like that, and also the expiry of options, whether you should do option selling or option buying. There are so many aspects of options trading. So if you are a CFD trader, you just have to sell buy sell or sell by the underlying contracts of an underlying asset. So you just have to do this. You just have to consider the risk appetite of your trading account and also yourself, and you have to control the position size. That's what you have to do in while trading CFDs. So it's a bit more simple. So CFDs are a bit more simple for a beginner trader. And when we talk about futures, the ultimate advantage of trading futures is we get what we say institutional tools like order flow or DOM, which we can say depth of market, and this all these things I have explained in the part 1 video. So hope make sure to check it out. So we have this all institutional order tools while trading futures because you trade futures out of you execute orders which go to a centralized exchange, and all the data comes out of the centralized exchange. So you have access to order flow, you have access to DOM, which is the real data which you have the access to. But in CFDs, you direct trade with the broker, or you direct trade with the prop firm, which takes your order and provides it, executes it through a liquidity provider. So this kind of you know this is, you can still consider it as fishy, and this is where the brokers make money. But if you are right, and if you are you will still make money trading CFDs. It's not that it's a scam or something, but yeah, it's a little bit risky, and futures a little more in the safer side. But the more risky for a beginner is options because it's a very complicated space. So in this video we will be specifically talking about what a beginner should focus. So what a beginner should focus. So basically the first part I will be covering in this video is the education space. there are many core sellers and stuff like that, but you just don't have to get into FOMO and buy all those courses. You first have to learn the basics first. So in this video we will be covering this aspect, the education space. So in this education space, what I have to tell you guys is, you know the thing is, first learn the fundamentals of trading. These are the this series is based on the basics of trading, which we will be which is not something related to technical analysis or fundamental analysis or how to read news. It's you know it's something that it's little bit out of trading, but this is the things which I am telling you inside of trading what you have to do. So considering the fundamentals, I will be explaining on that. Learn the fundamentals of trading. This means that you have to learn basic price action, which is the very main part for the traders. Basic price action. Example, learn about support and resistance, and how to identify key zones. This is also one of the basic fundamentals which you have to learn. And touch points, and also how to read volume profile. So what is volume profile? Reading volume profile is simple. You see this chart over here. So this is what tick volume is. So let me show you this. So this is what a tick volume is. You can basically don't get scared of seeing this color. This is very simple. You just have to learn to read this volume profile. Let's say I'm trading US 30. So according to Indian Standard Time, the US markets open at 7 p.m. So here, as you can see, we will be going to 7 p.m. candle, and you can see here the 7 p.m. volume candle is very large. So what this concludes, that when 7 p.m. happened, exactly at those time, the number of transactions in the market increased. More volume kicked in, which more volume kicked in, which this is the outcome. The more volume kicked in, this is the outcome of there are more transactions happening in the market. So a big player in the market which has a lots and lots of money. Let's say you are an individual, you are a businessman who just inserted a lots and lots of money in the market. Let's say, for example, $500 million in the US 30. So it may influence the price of this Dow Jones index a little bit, because $500 million is nothing if you compare, but it may affect because it's still a big amount. So if you are an individual or a businessman, a very big businessman, and you want to, let's say you just inserted a $500 million worth of lot size, this may manipulate the price of the index itself, but it cannot manipulate the volume, because volume is, what volume is. First of all, whatever you see, this tick volume, this is all about, this volume is all about number of transactions. So the more transactions is equal to big tick volume, as you can see here. So what this concludes, at 7 p.m. the market opened and a huge volume kicked in. So actually the thing is, as soon as the market opens, there are millions and millions and millions of order gets executed, which result in increased number of transactions, and we get to see this big tick volume. at 7 p.m. as you can see, 7 p.m. IST according to Indian Standard Time. So this is what volume is. It's very simple. It's very simple. You just learnt how to read volume. 90% of the thing you learned about volume in this, in the last 1 to 2 minutes. So it's very simple. Understanding the fundamentals of trading is very simple. Like basic price action, it's very simple to understand. The how to identify key zones, it's very basic. It's very easy to understand. You can, I will be also posting these videos in my academy also, which I will be launching soon, so you stay tuned for it. We will be also covering the basics, and we will be also covering the complex part of trading also. So the complex part of trading is understanding the order flow tools, which is, goes under futures trading. So I'm just composed and focused on CFD space, because more and more new traders are coming into this space, which who needs guidance. They just randomly trade anything. I get upset when new traders come into the markets, and just for the sake of making more money, they get into options trading, which is a very, very, very complicated space to, as for a beginner. I'm still, you know the thing is, I'm trading the financial market since 1.5 year 2 years. I have literally, before trading the financial markets, I was an economics student. So basically I have 3 years experience in financial markets, and till today options, sometimes I understand it in a wrong way. 3 years of my financial markets experience, still then I am unable to understand options clearly till now. For example, how to read the options chain, the thing about theta decay and stuff like that. Still then, this beginners who have just traded the market, not only just traded the market, but the thing is they have gambled past 2 to 3 months or even 1 month, and they get into options trading. That is complete nonsense. And I get, I feel pity for them. That's the thing. So if you are a beginner, I would, highly recommend, just you know don't trade options. You don't go to options, because it might feel it's what you will say, a quick money scheme. It might feel that it's a quick money scheme, but it's not. It's very complicated. It's a very complicated space in trading, especially. So just focus on the CFD. So these are the fundamentals of trading you have to focus on. And volume profile, key points, touch points, and I have almost covered the things which I wanted to cover. So I don't know why this is happening, not happening. What the fuck is this? What the fuck? Oh shit. Excuse me, pardon me. Yeah. So we can only zoom out this much. Yeah. So let's jump into the another aspect. So what will be the aspect? The risk management. Yeah. In this video, we will be also covering the risk management part. It's showing a little delay, but yeah, it's okay. So what's the risk management? So in the risk management criteria, the thing is, first you have to find an edge. So it can be anything, like if you learn basic price action, and the volume analysis, and the time period of sessions, like which session has the most influence on the markets, and which session starts at which time according to your respective time zones. You have to also learn this. And let me tell you, if you are trading under Indian Standard Time Zone, so at 6:30 the New York session starts. At 7 p.m. 6:30 p.m. the New York session starts, and at 7 p.m. the American markets open, the American stock markets open, which is the New York Stock Exchange. The Wall Street opens basically at 7 p.m. IST. But the London session, which also has some impact on the markets, in the forex markets especially, the London session starts at 1:30 p.m. At 12:30 p.m. the pre-London session starts, where a little volume comes in, like a little volume gets in, number of transactions happen. But more importantly, the London Open happens at 1:30 p.m. according to Indian Standard Time Zone. So you always have to remember this, the time period of sessions. This also goes under the you know basic fundamentals of trading, not the basics of trading. This whole series, this whole thing, the fundamentals, also the basic fundamentals. So yeah, the third part will be basic price action. And if you want, you can read books on candlestick patterns, but I don't think so you have to read those stuff. Those stuff might work or might not, but the thing is, you just have to go carry on with these three are little bit, you have to put more stress in it. And after this, what we have to say, yeah, find your pair. What does this mean? So according to your edge which you have built using the price action, using the volumes, volume analysis, or using keeping in the mind about which session starts at which time, just let me tell you that the first trading strategy I have built was built that I built that upon these three things. I just learned basic price action, I just learned the volume analysis and the time period of sessions. Considering these three, I made my first trading strategy. And till today, after some refinements of that same trading strategy, till today I'm following that same strategy, which is, you just have to find clean ranges like this. As you can see, we have clean ranges and we just wait for a breakout. But before breakout, we have to we have to confirm the trend by, you can use this 20-day simple moving average to confirm the trend, and we trade in the 30-minute time frame. So I will be explaining more about my strategies in the Chart Addicts Academy, which I will be launching soon. So this is all about. And find your pair means find your financial instrument. You can consider it. So it can be gold, it can be US 30, it can be NAS 100, it can be S&P, or if you are trading futures, it can be ES or NQ, whatever it can be. But the thing is, before finding your pair, you have to do one thing. And what's that one thing? The one thing is back testing and simulation. Not only back testing, because it's 20% of the game, but simulation, it's 80% of the game. Before, I'm talking about which game, by the way? Which game? Game of finding an edge in the markets. You also have to backtest, and you also have to simulate, especially. And if you want to simulate, you have to paper trade. And if you don't know how to paper trade, you can basically go to Funded Next, where they provide prop firms. And yeah, if you want to purchase any account in the funded next prop firm and you want some crazy discounts, you want to some reduction in buying prices of your funded accounts, you can use the code down in the description box below. And let's jump into the video. So you can use this free trial option. By the way, I have a free trial account which is a simulation account. I didn't purchase it with my money, they just gave it for free. And this account, you can you have to have, you can see here how many accounts I have been trading. So these are all accounts. As you can see, you have to maintain this, track record. Inactive means the accounts which I have passed. So you can see I have a huge track record of how many simulation accounts I have passed. And breach means also I have a huge track record of accounts that I have breached. So you have to have this simulated track record, track record of these simulations. So yeah, you have to find an edge in the markets. And this was all about this. So video is getting quite long. And we were in the risk management part, but we didn't talked about risk management part. But we will be covering the risk management part in the upcoming third part of this video, in the basics of trading. So what we have discussed till now in this session, all we discussed about is how to find an edge, how to find an edge, and what to focus while getting started. So basically the basic fundamentals of trading. So this is all we have discussed till now. And hope we will be covering the rest of the content in the upcoming video. And stay tuned for the upcoming video. And the video had been quite long. And this was all for the video. Hope you liked it, hope you enjoyed it, and hope you have learned something from this video. And if you want to purchase any funded account using the funded next platform, and you have to you want to avail some crazy discounts, then you can use the code down in the description box below. And soon I will be launching my ChartedX Academy, which where I will be sharing my trading strategies, my trading methods. And also the special thing about that academy will be you guys, if you are experienced, you can make your own courses and you can sell it on my website itself. And the main thing is the audience will be mine, and the courses will be yours, and the money will be yours. And you just have to give a 20% split to me, and the 80% of the money will be yours, whatever you have earned through your courses. And this was all about the ChartedX Academy, and I will be launching that soon. I will be launching ChartedX Academy for you and for me as well. So this was all for the video. Hope you liked it, hope you enjoyed it, and make sure to use the code down below in the description box. And also to check out the videos which I'll be posting the links down in the description box too. So this was all for the video. Anshuman Rao signing off. Peace out.